Is the recent correction in S&P 500 and Nasdaq 100 a golden buying opportunity or is a sign of a trouble ahead? The stock market never moves in this straight line. After the recent correction in S&P 500 and Nasdaq 100, many traders are wondering, is this a buying opportunity or just a trap? In this video, I'll break down the hidden price action, key support and resistance zones, and market sentiments using the fear and greed index. You will get the complete roadmap for the upcoming week. Stay tuned because understanding these signals could be the key to your big next trade. Don't forget to like, subscribe, follow. Let us dive in. This is the monthly price chart of S&P 500 index. Why we are looking at the monthly price chart? Simply because we want to understand the historical price action and the behavior of S&P 500 with respect to the moving averages. What you can observe here is whenever there is a bear market like 2020, price took support at EMA 55. Here again in 2022 bear market, it took support at EMA 55. But whenever there is a uptrending market and in the markup phase, whenever correction takes place, it takes supports at EMA 21. So even if further correction takes place in S&P 500, I don't think the correction will go beyond 5,300 level because EMA 21 is currently at 5,328. And here some price action are very important. This is the area of resistance and which is coinciding with EMA 21. So overall it is looking after it has made a all-time high in February 2025, the correction has started and the correction is a little over 10% from the recent peak S&P 500 has made. So that looks to be a normal correction. Let us go to the weekly price chart. In the last week, it corrected by 2.27% on a week-on-week basis and finally it closed at 5,638.94. But see the price action. What the price action suggests? There is a large lower shadow in the last weekly candle suggesting that there is a pierce-through action of EMA 55 and finally the price closed above EMA 50. So this is a kind of bullish pin bar which has got created that the bears tried to push the price down, but bulls came in action and recovered the price. So EMA 55 has already acted earlier as a support in weekly time frame. So it looks, seeing the price action, that the correction is over. Let me overlay some of the technical studies. This is the cup and handle pattern. This is the neckline, which is coinciding with EMA 55. S&P 500 is a very, very important support area. Where is the major support? At 5,300. That is what we discussed in the monthly price chart because it is coinciding with EMA 21. But there is an immediate support at 5,600 that we discussed in the last week also, where the price is currently respecting that important support area. And this happens to be the neckline also. So in my opinion, if there is a follow-through of 5,706 on upside, probably that will indicate the end of this correction. Where is the resistance? The median of the prior week candle is at 5,870, which is a very important resistance area. And if you do the retracement analysis of this corrective wave, 38.2% retracement level comes at 5,750. So 5,750 to 5,870 should be the resistance in the forthcoming week. Now, once the price takes out 5,750 level, which is 38.2% retracement level of this corrective wave, which is a derivative of the golden ratio, then the price should go to 5,900, which is a golden ratio of this corrective wave. Now let us have a look towards the daily price chart. After this correction, see the last trading session of the last week. There is a bullish kicker kind of candlestick pattern, which is a pretty powerful candlestick pattern. Look at RSI. RSI shows some kind of bullish swing breakout, which is a momentum indicator. So momentum is also building up. William percentage R is in oversold territory. So there could be a possibility of upside move in the forthcoming week, because we need just to have a follow through of the high of the last candle. So what finally we conclude? The moment the price recovers and goes past the golden ratio at 5,900, there will be significant possibility that S&P 500 will make a new high. Now let us move to the price chart of Nasdaq 100. This is the weekly price chart of Nasdaq 100. In the last week, Nasdaq 100 finally closed at 19,704.64, and thus it was bearish by 2.46% on week basis. But after this correction, which is around 13% from its recent peak, see the candle of the last week. It is a bullish pin bar defending the EMA 55. Earlier also price respected EMA 55. It respected here too. So EMA 55 is acting as a dynamic support in Nasdaq 100. Here too, there was an area of resistance. So it acted as a support. So it seems that the correction is over. What we need is a follow through of 19,868, which is the high of the last week. The moment price goes past that, then there will be a recovery in the price, and the next possible resistance could be to 20,300 and then 20,600. 20,300 is nothing but the 38.2% retracement level with respect to this corrective wave, which is a derivative of the golden ratio. So once that level is taken out, there will be a significant possibility that Nasdaq 100 may go to 21,000 to 21,100, which is the area of golden ratio in Nasdaq 100. And once the golden ratio is taken out due to excessive demand, it will start trading above EMA 21 and volume weighted moving average 21 period, and that will clear the path for the new high for Nasdaq 100. Let us have a look towards the daily price chart. In the last trading session of the last week, after this correction, there is again a formation of a bullish kicker kind of candlestick pattern, which is a powerful candlestick pattern, as the market gapped up and then finally closed above the opening of the prior day candle. So this we had discussed about the support area in the last week. 19,500 was the support area, and the next major support is 18,500. So currently the price has respected that important demand area that we discussed in the last week's video. Considering the price action, 19,300 to 19,500 is the immediate or intermittent demand area, and even if some deeper correction takes place, 18,500 should act as a support area. However, 20,300, which happens to be the derivative of the golden ratio, that is 38.2% retracement level, will act as a resistance in immediate sense. And if you see this price action here, the multiple moving averages will act as a resistance on upside move, which falls within the zone of 20,300 to 20,600. Market is always full of surprises, but with the right analysis, we can always stay ahead. We have decoded the key support and resistance levels, analyzed the fear and greed index. Now it's your turn to make an informed decision. What do you think? Will the S&P 500 and Nasdaq 100 hit new highs or face another correction? Drop your thoughts in the comments. Don't forget to like, share, follow and subscribe for more market insights. See you in the next video.